Hello, Mayowa. Yes.
Hello, sir.
Okay. Go ahead now.
Good afternoon, everyone, and welcome to Esam's webinar for the month of July. This
Hello,
month
Mayowa. There's an echo at your background.
Please,
Somebody should move.
This month we'll be discussing the effects of energy prices on the Nigerian economy. Like we all know that crude oil is a major revenue earner for the federal government of Nigeria. And in the course of this year, we've seen crude oil prices go as high as $100 and above. We've seen the price of oil go as high as $100, 110, 120, and the rest of it here. And you have told me that give or take, the price of oil has averaged around $100 per barrel. So is this really good for Nigeria, or is it bad for Nigeria? And that's what we want to examine today. And joining us on this call is Nengi Sokari. He's a research analyst at Steven Asset Management. He will be doing the first phase of the presentation. Then afterwards, we have a seasoned financial analyst and planner, Mr. Kaluaja, who will be doing the top level analysis. Right about now, I would like to invite Mr. Nengi Isokari to have his presentation now. Then we'll take it up from there. So Nengi, you have the floor. Thank you.
Thank you, Maiwa. Good afternoon, everyone. I would like to welcome you to this webinar. And in a moment, I'd like to share my screen. But I'll be speaking on the effects of rising energy prices on the Nigerian economy. I'll be speaking on the effects of rising energy prices on the Nigerian economy. So currently, what we have on the continent is a case of stagflation, which is characterized by slow economic growth, increasing inflation, and rising unemployment. So in the situation of economic growth, we see that from Q4 last year, we have a GDP growth of 3.98%. And Q1 this year, we have 3.11%. So growth is actually decelerating. In terms of inflation, we had 17.71% coming from May, and by June, we had 18.60%. Of course, unemployment is at 33% in the country right now. And commodity prices on the market right now is averaging around $100 per barrel. And this is after the crisis, or you can call it the Russian invasion of Ukraine. Prices have beat the $100 per barrel price mark, and currently we are looking at even possible higher prices as predicted by Goldman Sachs. So this situation creates benefit for some countries, such as the oil exporting countries as Angola, Libya, and Nigeria. However, there are net energy importing countries as Rwanda, possibly to an extent South Africa, but this is not a good situation for them. I would like to speak more on the situation with Nigeria because that's one of our key concerns. And the Nigerian case is that we have a high subsidy plan, and we have barrel of oil going as high as $100. So we're not really benefiting because of our subsidy regime. Now, to paint the picture, subsidy in itself is not really a bad concept because in Canada, they subsidize our healthcare to make it a little bit affordable for the citizens. But in our case, we see that it actually affects our fiscal policy. And we had our subsidy payments around 200 billion as of 2015, but currently is in excess of 1.6 trillion naira. So we're still going to have rising subsidy payments, and this is not good for the situation. So we're not really going to benefit from this in the long run. This growth is going to really, this retarded growth or slow growth is going to affect the country as it is. And we have the IMF and AFTB, as you can see, cooperating. We're expected to grow by 3.6% annually. But we're going to have 3.4% in 2022. So we're going to have slow growth, and both bodies, the Washington-based IMF and Cote d'Ivoire with AFTB, agree on this view for the Nigerian economy, which is a little disheartening, just put it mildly. But this outlook is subject to high uncertainty because various factors might positively influence or negatively influence this outlook. And the higher oil prices may be caused by other technical issues such as vandalism and technical breaches of our infrastructure, oil-related infrastructure in the south. But there's a bright side to all of this. And the bright side is not really short term, but in the medium to long term, because we see the European nation, let's take Germany for instance, looking towards Africa for gas, natural gas. And to an extent, our oil is actually going to improve, our oil output would improve. But in terms of our natural gas, we see that in the medium to long term, they are going to look towards Africa. Based on the Nord Stream being closed, Nord Stream is the pipeline that supplies Russia with gas. And as of early this month, it was shut out for maintenance. But about 2 days ago, if I can recall properly, it was reopened for 20 to 30% of gas coming. So why this affects the European economies, because a country like Germany, for instance, they've been used to getting cheap or below market gas, and this has helped their manufacturing sector. For instance, the steel, they can power um, they can power their facilities. It helps their production. It keeps their production costs low. But when you shut this, when you reduce the amount of natural gas coming, it's going to cause a slight recession. The currency is going to suffer. They're going to have higher interest rates. So they have to look for how to win their dependence on Russia, and they're going to look to Nigeria. Now, in order to look to Nigeria, there are certain facilities or infrastructure that will be needed, such as a liquefying plant to liquefy the gas, and ship it out to Europe. Additionally, we don't have a pipeline per se running to European countries, so they're going to have to ship it, and all of this infrastructure is going to cause some inflow of investment, which is going to help our FDI. So going forward, there are going to be financial headwinds, like we said earlier. But Nigeria, Russia, Ukrainian trade is just below 3%. So it's not going to be a significant direct impact on our economy. However, there's going to be an indirect impact in the sense that we see the US raising rates, we see the EU zone raising rates, and of course, Nigeria would have to follow suit in order to keep in order to stay competitive and keep the cash flow in. But that is how it's going to affect us. And it's going to generally also affect our manufacturing sector, because it's going to raise finance costs and make it more difficult for manufacturers to have a better bottom line. So that is an indirect effect of this. Another indirect effect will come in the form of higher prices, such as diesel and petroleum motor spirit. But in terms of diesel, we have some manufacturing companies like Boa Cement, for instance. They have a higher cost of goods sold of recent, about 48%. And most of this was coming from the higher cost of diesel running to their plants. So this is also another indirect effect of the invasion. So it's going to affect our all share index. About 2 days after the first rate hike, we saw that the market receded from about 53,000 lower. Currently, it's struggling to maintain the 52,000 psychological level. It's around the 51,149 level, and it hasn't really broken that area. So this is somehow sort of a psychological resistance, and it's giving serious problems to the country. So the ASI is going to suffer. That is known. Some stocks within the markets, they are actually going to take a hit, but they would always still be a bright side. So the kind of inflation we're experiencing is commonly known as cost-push inflation. Different from demand pull inflation. Cost pull inflation happens from the input of energy prices into our company's costs. So this is going to make running businesses in the country far more expensive. You have, just like I said earlier, Boa Cement and all of this is going to affect prices, but the quantity is going to drop. But a fact worthy of note is if we have cost push inflation, monetary policy is only going to do as much as it can. So we expect further fiscal policy, but considering that we have elections afoot, we don't see too much of that coming in to aid or complement the monetary policy we have. So the cost push inflation leads to lower economic growth and higher prices. And aggregate supply curve will move to the left. As a result of that, you can even see my young friend here trying to push the cost to the left and just remove the pressure. But we all know that he might come under the weight of the situation, and it's going to affect the economy generally. So what are the physical implications of this bond fixed income? If you're holding a bond currently, let's just have a hypothetical situation. You're holding a bond and the yield, automatically the prices drop. but you're going to have a coupon. You're going to get paid higher coupons. So selling or offloading your bonds at this point would not be the best because you're going to, or you have a high probability of experiencing loss. If you're getting in at this point, if you're purchasing a bond at this point, you also have you're also going to get a reinvestment risk in the sense that, and also credit risk to a greater effect, because the higher yields that the government would have to pay increase the debt burden of the government, and that gives a sort of credit risk. But currently, right now, I think Fitch and Moody's were rated a B minus. This is not junk status, but just hovering around that area on the higher debts. For equities, we have also a dire situation, but to an extent, in the sense that we have the manufacturers, consumer goods will all likely take hits. The banking stocks might be in between because these companies are going to have high borrowing or lending costs. The banks might find it difficult to expand their loan books because of it's not really the best time to be carrying out the loan, barring inflation. And secondly, the manufacturing and other parts of the economy, they are going to have a problem with their bottom line based on the cost of finance right now. But there's still a green side and a positive side. And the positive side is that if you expose yourself to commodities or commodity-related stocks, you will be in a better position. But I just have to add that I'm really focusing on energy stocks at this point. Now, this is not to say that agricultural commodities would not do well. Agricultural commodities, they would have their own time in the sun. Let's take Pesco and Okomo, for instance. We have Malaysia banning the export of palm oil. We have Ukraine, basically with the invasion, sunflower oil is going to be restricted, or the output is going to drop. And a direct substitute for sunflower oil is palm oil. And palm oil, obviously, we all know that palm oil is what these two companies benefit from. And that's where most of their money comes from. But we have a focus on energy stocks because the two key factors here, especially for a particular stock, is that gas will be needed in the near future. And these will be the forerunners to supply. Already, one of them already supplies the federal government, as you can see. And that company will be Seplat. Seplat actually supplies the federal government about 30% of the processed gas used in electricity for Nigeria. And if any investment is likely to come into Nigeria, they would most likely start from Seplat. A high chance if we are regarding public companies. Transcorp Ughelli Power Plant, why I think this would be a good stock to go because of the Ughelli Power Plant, that's the buying. We know what that means, and Total Energies as well. So these three stocks, I believe, will do well in this situation based on how we see the outlook of things. And in conclusion, we are really dependent on energy and commodities. And to be honest, I believe that we can diversify, which is very essential to the economy. Now, to the credit of the CBN, I see that efforts have been made. They've released some funds, some companies such as Presco, 20 billion. They're trying to shore up their account with the RT200, which is the raise to $200 billion, which is quite laudable, but we don't know how achievable that would be. But we still hope and pray that Nigeria gets better. I pray that God blesses Nigeria. Thank you.
Wow. Thank you very much, Nengi. That was a wonderful presentation. Thank you for reminding us that. Thank you for reminding us about the inverse relationship between price and yield. Thank you for reminding us that Nigeria might be tottering on the brink of a junk status. Right about now, I would like to let everyone know that if you have questions for Nengi or Mr. Kalu, who will be presenting in the next few minutes, please, I would like you to pen them down so we'll take it as once. So it is time for us to go deep into the top level analysis, and we have a very experienced man in the house. His name is Mr. Kalu Aja. I'm sure so many people know him. He's very, very active on Twitter, and he has been in this space for quite a long time. And I actually do not know how to quantify or qualify the level of experience we have in the house this afternoon. But I'd just like to welcome Mr. Kalu to take the top level analysis. Thank you very much. Mr. Kalu, you have the floor.
Yeah, hi, thanks. I hope you can hear me real good. Is audio good?
Yeah, it's good, sir.
Right. So yeah, thank you for the invite. Glad to be here to speak with Otto Stevens folks and everyone else listening. So great summary done by research, Mr. Sokari. Thank you so much. I want to bring it home to how it affects the individual Nigerian, like to their pockets. And the best way I can do this is just for us to go back to the presentation done by the Honorable Minister of Finance when we're talking about the level of revenues vis-a-vis debt servicing. So the news has been that, our revenues cannot service our debt. And that's the top line news that we're reading. But underneath that, why is that happening? Because the NNPC is basically paying for subsidy. And when the NNPC is paying for subsidy, what it then means is that there's no remittances being made to the Consolidated Revenue Fund or FARC. And as crude oil prices are going up, our cost of importing PMS has gone up. So directly, we then see this energy play that is happening because of Ukraine and Russia affect our own pockets in Nigeria. That even though we're an oil producer, what is happening thousands of miles away is taking away revenues from Nigeria. So literally, we don't have any money in Nigeria anymore. Once we pay the debt, we have to borrow to even pay salaries before we even borrow to do capital projects or even consume. This is just going to mean that consumption in Nigeria, investment in Nigeria is going to fall. So I do fear for markets like the research guy has said. It's a big problem, guys, but I'll stop there and then let's take it from there.
Thank you. Thank you very much, sir. Thank you for the introduction. Thank you for the quick introduction about what the rising energy prices, the impact of the rising energy prices on Nigeria. So I don't know if anybody have questions for us before we go deep into the analysis. Is there any question, participants?
Okay. Good afternoon, gentlemen. Let me kickstart by asking Kalu and possibly Nengi, as a portfolio investor, given the macroeconomic picture you guys have painted, what should I be doing? So let me ask that so that we can kickstart from there. I think starting from Kalu, and maybe Lengi can pitch in.
Yeah, Tunde, thanks for the question. I think the answer is going to be, what kind of investor are you? Are you trading short term, or are you going to be this long-term value investor? For 2022, only one sector has shown green, has been positive, and that's commodities, crude oil, and energy. So only energy has posted a profit in 2022. So we see Warren Buffett buying Occidental Petroleum. He knows something, right? So if you're a long-term guy, I would say go back to the market, go back to those undervalued markets, the ETF that are buying the US market. Right now it's down, i.e. in terms of pricing, because earnings are being hit by inflation driven by energy. I would go back to those two stocks right now in the US and buy those stocks at the discount that they are today, because 2-3 years in time, those stocks are going to turn around. Over a 10-year, over a 5-year period, the returns on the US markets have delivered a minimum 10, 9%. So you're in a good place if you're in that US market in terms of equities, if you're a long-term guy. If you're a short-term trader, there's only one place you can be. That's going to be energy. You want to play that energy curve with all this news going up and down. That's where you see prices moving up and moving down. Every other thing is flat. Bitcoin, bonds, even US equities are down. And that's for the international market. Nigeria does have some opportunities because we're looking towards an election coming up. There's going to be spending, and we know what happens to that spending. It finds its way back to the stock market. So you're going to see a lot of stocks moving up short term because cash has got to come into this market to basically take them up. But long term for Nigerian stocks, I would say watch the elections. The elections turn out to be smooth, no issues and all that. The market takes a 25% uptick immediately, even with the GDP and of course the Naira gains strength because people is going to be optimistic and remittance flows will come back. So just to summarize, if you're Nigerian, you're looking at the short-term play, very, very, very short-term, fixing for short-term, trading for short-term on the stock markets for now because elections are big, you don't know. For international markets, I will go back to the undervalued US equity market and just sit there because the market will eventually turn back and trying to buy those stocks at the discounted prices right now. If you're trading, you're looking at the energy stocks because that's where the action is right now.
All right, thank you for that very, very concise and precise answer. So what I hear you saying is that, I mean, if I'm an equity investor, my exposure should be leaning towards energy stocks. I'm looking at the Nigerian Stock Exchange, NGX, and I see essentially only two stocks that can give me exposure to energy, i.e. Seplat and possibly Transcorp, all right, on the side. But I'm also looking at the same NGX, and I'm seeing that 65% of market cap is in banking, which means that as an investor in the Nigerian market, I'm also probably overweight banking. So as an advisor, what will you say I should do with my banking stock at the moment, medium to long term?
Yeah, so just to be clear, this is not investment advice. I'm just expressing my own opinion. To give you advice, I'll have to know who you are, your risk profile, your age to give you real advice. But just to make the point, right, for Nigeria, we're looking at the entire Nigerian index, the Nigerian market, maybe the NSE 30, the 30 top stocks in Nigeria. That's what we're looking at. It's abroad that we're looking at energy for just the US and Western market, looking at energy for just there. For Nigeria, we're looking at the NGX 30, that grouping, the MTN, the Airtels, the BUA, the Dangote, that group of the top 30 top unit stocks in Nigeria. I think you take a short-term play now, there's going to be a lot of money in circulation that's going to seep into the stock market. It's going to raise all the boats in that market. Doesn't really matter where you are if you're in that NGE top 30. If you go to the stock market, there's the PENCOM index, there's the main board index, the premium index. Those sectors, I think, are going to go up because liquidity is going to flow to them. Specific to your question on the banking stocks, I particularly like Zenith. P is low, dividend yield is high. So what that means is that if I buy a Zenith, right, I am all nearly matching inflation. For last it's about 15%. Inflation is about 17%. So I'm nearly matching inflation, but I also have the chance for capital appreciation. At a stock that has a very, very low PE, which means I'm buying it at a lower multiple to earnings. So I like that particular stock, right? And that's how I want to approach banking stocks. What's my earnings? How much multiple am I buying it for? And what dividend yield is it going to give back to me? Naira is a funny currency right now. You don't want to beat Naira too much. You're going to do long term. So it's not giving you something that's going to beat inflation. I'll be careful with that.
All right. Thank you very much. I yield the floor to other participants.
Let me ask, Nengi, would you like to weigh in on the questions asked previously?
I would like to associate myself to everything that elder senior colleague has said. I think he has done justice to it. there's no other thing that I'd like to see. Probably you can, for diversification regarding the portfolio you have, you can add a little bit of agriculture stock, Resco and Home, just diversify and remove yourself from banking and stocks.
Okay, thank you. Are there other questions? Is there anybody who has a question? Okay, I can see Mr. Kalu. Okay, he has a comment there.
Mr.
Okay, so I have.
Can I go ahead, please?
Yes, sir, you have the floor, sir.
Yes, yes.
All right. In view of the falling value of Naira, what can one do to hedge against? Because if we're talking long-term investment, whatever we put now in Naira in 5 years' time or so, if the value of Naira is falling, may come to nothing. Is there anything one can do to hedge against that on a long-term basis so that all the Naira investment may not just come to something very valueless? Thank you.
Thank you, sir, for the question, sir. Mr. Kalu.
Yeah, that's a great question, and that's what everybody's asking, right? So overall, I would say if I am not spending my Naira in the next 90 days, I would not keep it in Naira. So any money, any inflow I have that I'm going to spend in the next 90 days, I can keep it in Naira. If I'm going to keep it longer than that, I want to do something else with it. Either I want to convert it to a different currency, or I want to do a prepayment and convert it from cash to an asset, which means if I have 5 million Naira, for instance, I want to go and ask my landlord, can I pay you rent in advance? Give him the cash, and I have the asset of I've prepaid my rent. So I'm out of cash because inflation only affects me when I hold cash. But those are like short-term tactical decisions. I would say long-term, is there a way you can diversify your Naira? Yes, there are lots of Euro bond and dollar bond funds in Nigeria. And I don't know if I can mention the names, but if you Google it in Nigeria, there are lots of funds, lots of banks, lots of investment funds that do offer dollar-denominated investments from Nigeria, which means you can actually invest, you can take your dollar from Nigeria, buy those investments, and you earn a dollar return. I also know of an app, they are US-based, but they are operating in Nigeria, that's paying almost 6 to 7% on dollar investments. They are SEC-registered and all that. So the idea is to diversify away from just one currency and one country. You want to move away from Naira and Nigeria and to spread your risks. And those options are available, both in terms of fixed income and also in variable income, which is equities. So overall, if you're not spending money within 90 days, I wouldn't keep it in Nigeria, Naira, or I would try to at least have half of it in the foreign currency. And if you then want to invest, there are fixed income options for you. There are equity income options for you that you can place your monies and get a dollar return your funds. That's how I answer that.
Thank you very much, sir, for that answer. Are there other questions? Please, if you have a question, you can signify by raising your hand. Okay, in the absence of no questions, sir, okay, we have someone's hand raised. You can go ahead, sir. You can proceed. Unmute yourself and speak, sir.
Okay, good afternoon. My name is Otto Abaseko. My question is to Mr. Kalu Aja. In terms of the foreign exchange, because of the challenges we're seeing in energy prices, what do you see happen between now and December? The foreign exchange market is quite under intense pressure. How would you advise the monetary policy authorities to navigate it? Because it's really going to impact businesses and impact even households, even those that are in diaspora. I mean, those that want to travel also. I mean, it's a huge challenge. What would you advise at this point? Thank you very much.
Yeah, again, good question again. So, I mean, it's a very, very simple calculation, right? We are doing more imports than we're exporting. So just on that basis alone, dollar is going to keep on going higher and higher and higher. The only thing I see that can stop the rise of the dollar is remittances, which means that more Nigerians abroad start to send money back home. So, but remember, Nigerians are sending money back home, but not to the CBN. Why not to the CBN? Because the CBN rate is about 4.24. But you can send money home through P2P or through any other avenue and get 6.20, 6.50. So nobody's sending money home to the CBN. And because they're not sending to the CBN, then the CBN rate is going to keep on remaining that low 4.24, right? The only way CBN gets money is if they devalue the Naira. If they devalue the Naira and they match what the black market is quoting, then money will pour into Nigeria and it might even gain value. So there's nothing you can do about it because supply is not matching up to demand. So you will see the Naira will be weak throughout from now and it might even get worse towards the election. Food is being imported because we're not making enough food because of the insecurities. So that's the situation. It's not really a binary. You don't have to be a genius. It's just there. The dollar is going to be in demand from now till maybe 2023, unless something happens, CBN devalues. But if CBN devalues, then all those debts that the government is paying, they can easily pay it back. So they have an incentive to devalue. It's just the political side. They don't want to devalue now because to go to an election, the other party will say, the red dollar at 1 to 1, now it's 500 to 1. That's what's keeping them. But in terms of the best policy for them, it might be to devalue because I don't see them attracting dollar investments so quickly. The only investments from dollar that can come quickly is remittances. So if you are abroad or you have people abroad, why would they send you money to Nigeria if the rate is high? If it stays at 4.24, nobody will send money to CBN. If it goes to 600, people start to send money back to CBN. So that's just the way it's going to be.
Thank you very much, sir. So I have a question here, related question here. So I think the person is just trying to ask, should subsidy go? What's your opinion on that, sir?
Yeah, I mean, everyone knows it should go. The question is, when should it go and how should it go? Subsidy is a mistake, you know. They had the chance, and I'm talking about the present government had the chance when they came into office. Crude oil prices had crashed to $40, $30 a barrel, and then there was no subsidy because crude oil price had crashed. But instead of taking the subsidy out, they were talking of under mobilization, under recovery, all that kind of stuff. And they let the prices come back up without removing the subsidy. If they had taken it off back then, by now we would have been talking a different thing. Take it off back then and pass the PIB back then, but they didn't. So now we're stuck in this situation where they cannot. They want to, but they cannot. Subsidy for 2022 is 4 trillion. 4 trillion. 4 trillion is more than the education, the health budget, even the defense budget combined. So all the money we make from crude oil, from VAT, from company income tax, all the money is not up to 4 trillion. And that's what we're spending on just one item, subsidy. Next year, the projection is 6.4 trillion, 2023 for subsidy. So we all know it has to go. And I think the next president is going to look for a way to take care of it. But for now, I don't think politics will let it go. There are many ways they can let it go in a very, very smart way. They can do a voucher system and remove subsidy, but give money back to guys that maybe are going to buy for do the subsidy at the pump, not at the ports. Do it at the pump. But elections have come. Once elections come, nobody will think about anything but elections. So they are in a tight situation. I feel for them, but they dug the hole and they are in the hole right now.
If I may follow up on that, Carlo.
Yeah, yes, sir. You can go ahead, sir.
The arguments from the side of those that argues that subsidy should be kept is that the social economic disruption or impact of removing subsidy could be much more than because subsidy we are spending. Yes, 3 trillion is a huge and humongous amount of money. But what someone has argued to me in the past was that, look, yeah, and all hell break loose. What Nigeria could lose could be much more than 3 trillion in terms of destruction of lives and properties and all whatnot. I would like to take your I would like to see your have your take on that. You know, how do you balance that?
I think today it's a fair point that if you take off subsidy, we all know prices are going to go up. We know that, right? But the point is that we can't afford it.
Okay, I can buy it.
Mr. Kalu, please kindly unmute yourself, sir.
So sorry about that, Tunde. Yeah, sorry. So the point is that, to the fair point, if you remove subsidy, costs are going to go up and inflation will go up. The problem now is this: we can't afford it anymore. In the past, we could afford it and it was a nuisance. It was a big cost, a big expense to the budget, but we could afford it when oil was 79, 80. Right now, they can't afford it anymore. Look at the numbers now. The interest on the debt, the service on the debt has taken all the revenues, which means they can't afford it. They have to borrow just to service the debt, not to pay salary. They are borrowing to service. So we need to be smart about it. There are ways you can remove the subsidy and keep the cost low for the low-income workers. If you tie BVN to the car vehicle registration and you pay the subsidy at the port, so you can say if you have a car, take your car if you want to get subsidy, take your car to road safety, take your BVN and attach it to your car, then we're going to pay you 5,000. You go to the filling station, you do e-Naira, you can use that e-Naira only to buy fuel. So all the low-income workers, all the transportation guys can get fuel subsidized. But the guys that have 4x4s, the guys that are in above a certain income cannot get subsidy. That's the way you want to do it. Because to say you will pay because you are afraid of inflation is what got us into this hole. What happens if fuel goes to $200 a barrel? We can't even afford it. Then we will then become Sri Lanka. Sri Lanka was subsidizing fuel. They were importing fuel and making it cheap. Same thing with Pakistan. But in the end, the numbers catch up with you. So it's a fair point, but you can't afford it. That's just it. I think you're muted. I'm done.
Sorry.
Hello, I can see Mr. Ogumoku. You want to ask a question, sir?
Well, just a comment on what Mr. Carlo has just said. That would also be the very reasonable way to do it, because there is an opinion that much of the subsidy is being enjoyed by people outside the borders of Nigeria. It's been said that our fuel moves as far as to most of our neighbors in West African countries. And the fact is that we may not even be the one consuming the volume we are paying subsidy on. If it's trying to BVN or something Nigeria, the moment those who are doing it they do it transparently, will at least be better off. That's just a little comment I want to.
Thank you very much, sir.
Hello, sir.
Do you have, okay. Yeah, good afternoon, Mr. Bayo Yusuf. You have the floor.
Yeah, thank you very much. I think we still need to look for a more creative way to deal with the issue of subsidy or no subsidy. If we play the card, just like what Carlos said, that we had the opportunity of removing it, we didn't do it. If we had done it, Nigeria would have been on fire by now. Take, for example, diesel. We have removed cost subsidy on diesel. Look at the price of diesel now. It's one of the contributing factors to the inflation rate we are talking about today. If petrol had been left, subsidy had been removed, are you saying we can afford to have petrol at 500 at the filling station, at 800 at the filling station? It's not possible. So the government needs to think out of the way. We need to address the infrastructural gap. Transportation system, if you have a good one working, we don't need to pay anybody 5,000 naira. If you can't use public transport, you want to use your private car, then you pay the subsidy, you pay for it. If you have the rail working, I will not bring my car on the road so that we can distribute the money and divert resources to more critical areas. So the government needs to address the infrastructure gap. We need to address the transportation system in Nigeria. All of them must work. The rail must work. The sea must work. Everything must work. It's not compulsory everybody put their car on the road. It's not compulsory. But you need to move goods from Kaduna to Lagos. Because diesel have been, what do you say, there's no subsidy on diesel. The cost of moving goods from Kaduna to Lagos is high. That's what's increasing the inflation. If the rail is working, the rail can move goods from anywhere. It can move goods from anywhere. So we need to get it working and put the necessary thing in place. The security, yes, address the security problem. That one we address them naturally once a lot of employment opportunity for people to work and get busy. So we need, government need to be very creative. We need to address the infrastructure gap. A whole lot of things need to be done. If the hospitals are working, I don't need to send my son to university abroad. If the schools are okay, primary school, secondary school, need to be free. Then whoever that want to go to university, let them pay for it. We don't need to keep having us to strike endlessly. So we don't need to share money to anybody. Let the government do the necessary social investment. Let them do it. So that, yes, whoever that want to now have luxury can pay for it. Excellent. Nobody use their car in London. Nobody use their car in central London. Nobody will try it. You go on rail. Yeah. You go on public bus.
Yeah.
Thank you.
Let me just, I think I agree with your comments in generality. Let me just make where the government got it wrong, right? So there's subsidy removal, there's deregulation. What they did was they took subsidy removal as a separate point away from deregulation. We had a chance to pass the PIB. The PIB would have allowed private sector investment in refineries. If that had happened, then when they removed the subsidy, you would have other players in Nigeria that could refine crude oil, and then petrol would not go to 500. It would actually fall, because then all those costs of demurrage, of interest costs to import PMS from Netherlands, you would not pay again if you are refining locally. But we removed that subsidy, we made it a special thing, and then we didn't pass PIB. Now we are now passing PIB, we have a Dangote refinery, so they are trying to see how they can put a bandage before Dangote refinery is operational. The idea is that if Dangote is operational, then the subsidy or the cost of that import will go away, then the PMS can continue. That's the mistake they did. Subsidy removal is not a separate part of the regulation. Right now, the federal government takes your crude oil and has told you that it's going to refine that crude oil, import it back to you, store it, and sell it at a price from Lagos to Maiduguri, the same price across the nation. And it can't do it. It has found that it cannot do it. What you are paying for, this subsidy you are paying for, there's no subsidy. You are paying a tax on the inefficiency of the government. That's what you're paying for. They just call it a subsidy to make it look as if without a subsidy, the tax would be a lot more. So they are subsidizing the tax you are paying for that inefficiency. That's what they call a subsidy. The only way fuel price comes down is if you have many players in the market that are refining so they can compete on price and bring it down. Diesel is deregulated, yes, but there's only one diesel refinery in the whole of Nigeria, and it only produces 10,000 barrels a day. Only one, the Niger Delta refinery. So it can't do anything. If you deregulate and you don't have supply, you haven't done anything. So you've got to allow those big players, allow everybody, put the grade and say, this is the diesel grade in Nigeria. Let everybody do an import. If I sell cocoa to Japan and Japan has a refinery, I can tell Japan to pay me diesel and bring it back to Nigeria and sell. That will bring competition. That will reduce the price. You can't take subsidy out of the regulation. It doesn't work. It will work that way now. But I agree with your point, Tobias.
Thank you very much, Mr. Kalu and Mr. Bayo, for your contribution also. So, okay, so are there other questions? Do we have other questions? Maybe we should take 1 or 2 questions more. Okay, so we have someone raising now. Mr. Mobolaji Ayola, you can speak. Unmute yourself and speak. Mr. Ayola. You can speak. Hello? So if you're having issues connecting or speaking, you can type in your questions. Okay. So I can actually see a question here asking for the opportunity to ask for that question. So you can reach out to us, research at Stephen NG. I'll type it in the chat box so you can send us your questions there. Then if you are not on our mailing list, because we send out our financial market reports on a daily basis. So if you are not on our mailing list, you can type your email in the chat box and pick it up from there. So, Mr. Ayola, we are still expecting you to speak. If you cannot speak, you can type in your question. Okay, is there another person? Any other question? Okay. Okay, so we have a comment here. The president said that, good afternoon, House. Will I be corrected to infer from Mr. Kalu's submission that Nigeria may have lost the opportunity to remove subsidy? So this person is asking that, can he infer that Nigeria has lost the opportunity to remove subsidy? So the question is for Mr. Mobolaji Ayola.
Yeah, I think we lost the opportunity to remove subsidy cheaper and in a planned manner, because we had the chance when the crude oil was cheap, $40, $50, $60. We could have taken it off, we could have passed the PIB, people would have come in. We lost that chance. It's going to go, not because of because we can't afford it. It's just how will it go? So the 3 candidates are all going to take it away. It's just how will they do it away? Someone might say, I will take it away and pay you palliative. Somebody might say, I'll take it away completely and you have no palliative, but it's going to go simply because no serious government can take 6 trillion and pay for cheap fuel. Not even food. If you are doing a subsidy on food or medicine or education, you can imagine what you get. Social security on sick, but on just one item. They look at the budget of Nigeria, the NBS did a report, right, for Nigeria. 67% of the average Nigerian's budget goes to food, not fuel. Fuel is 6%. So this fuel is, I say this, people argue, fuel is really an elitist product because you have to have a car to drive. People say, yeah, but there's public transport. You can subsidize public transport. You can do gas-powered public transport, right? Like Bayo is saying, you can do all that to elevate the the cost of transportation. Why can't you convert all the trucks, have a jobs program to convert all the COVID buses to use gas? That will create jobs, that will increase gas utilization, reduce gas flaring. There are many ways you can solve this problem. It doesn't have to be this subsidy, take money, buy bus and put on the road. That's too bland. We have to think out of the box, and it's very possible. Iran removed subsidy, and they did it almost the same way I'm saying. They paid subsidy at the pump. Even Saudi Arabia is reducing subsidy. So everybody is taking away subsidy. There is no problem with subsidy. The problem is that it's imported. That's the problem with this subsidy. If we are subsidizing local food, local petrol, local housing for 10 trillion, nobody will complain. The problem is that you are exporting 6 trillion out of Nigeria to Netherlands to import PMS. That's where the problem is, because the wealth is just going out. So we have to bring it back in to Nigeria. Then you create jobs, and then once you create jobs, people can afford, even if it's 500 a liter. 500 liter looks expensive. It's $1. It's $1, but it's expensive because our income is so low. That's why it looks expensive. If everybody's income went up 10 times and cost of fuel was 1,000 naira a liter, that's $2 a liter. Nobody would notice, right?
Thank you very much, sir, for your answer. We have somebody, Mr. Lukayode, please, you can speak.
Hi, Mr. Boyujuku. Thank you very much, Mr. Aja. Initially, I was listening on YouTube, but because I couldn't speak from there, I could only drop messages in the chat, and I didn't think anybody would see it real time. I decided to log off and see if I could join in on the Zoom. It took a while to finding that password. So I wanted to make a few comments. Yes, Mr. Aja is in terms of the fact that we lost our opportunity to take away subsidies, especially in the peak of the COVID pandemic, when oil price was really at its close to the floor. But again, there's an issue with that. That narrative, the fact that the government may still decide to take it away once oil price become back to what we consider normal in quotes. One, because it's been there before. Now, remember that when oil prices were low, obviously, if oil prices go back low, the amount we'll be paying for subsidy will also reduce alongside it. The idea of we're paying so much for subsidy, why would we be spending so much when we have all of that, the other sectors demanding attention and all of that, those comments would probably go away. The seeming seriousness of the scenario would no longer be as it is now, and we understand the relaxation of the kind of relaxed government we have in this part of the world, where there is really no they are really not proactive. We are more reactive in terms of our government's nature here. So we only react to issues. That was the first. I just wanted to say that I listened to that comment recently. Then I also wanted to comment on one of the participants' statements initially, when they said we can't take away subsidy impact and all of that. Well, I myself, if you ask me, my own opinion.
No asking.
Sorry. If you ask me, my own opinion would be, yes, we can take away subsidy, even now. Yes, we're looking at what the impact would be in terms of the real price of fuel when it hits the market and all of that. Well, let's not forget that the inflation we have in Nigeria is, I think the fact that the whole oil price thing and the attendant effect on price of diesel and all of that, price of fuel, the effect it has is limited. In terms of the inflation we have in the country today, it's limited. The inflation we have is mostly caused by scarcity, more of scarcity than the fact that the prices may be very expensive. Now, scarcity in terms of, one, we know the food supply chain, we know what's happened with it, even internal within the country itself. Security issues, farmers can't go to the farm, when they can even go to the farm, those people just, the bandits come, tell them to provide all their harvest all their, take all the harvest proceeds and all of that. And even those who manage to get the products harvested, not even transport them down to where, you know, the food is needed because of the insecurity on the road and all of that. And then when you take away that aspect, I think diesel is a more important commodity to subsidize rather than petrol. Now we know that diesel is free, but this is what majority of the manufacturers use in production. Very few manufacturers use petrol production. So in terms of how it affects or indirectly or directly affects the cost of price of goods in the market, in terms of affecting direct inflation, you're looking at diesel. If we were subsidizing this, whatever the amount of the subsidy, we know that the manufacturers can even take it. They can take it. Let's take away the subsidy from petrol entirely. And that way, I think inflation would be more, you know, the effect on inflation would be more pronounced than whatever the MPC decided they're doing. I don't know how that their decision was taken anyway. But then, well, I guess those are my few comments about it. Yes, we can take it with us, even at this point. And if we don't take it away now, what makes us think we'll take it away when the price of oil goes back down? Because again, we have a reactive, not a proactive government. It's been that way over the years. They wait until something happens and everybody starts shouting, and then what do we do at this point? But when everything seems to be all right, nobody's shouting, nobody does it. Just let it, you know.
Okay, so thank you very much for that contribution, Mr. Akintumile. So, Carlo, if I hear you correctly, our inflation is imported because we are having to send crude abroad and bring back refined products expensively. This says to me that the only solution we have, if we are going to localize subsidy, as you have said, is to hope that the Dangote refinery comes on stream and starts to produce, such that even if the subsidy regime is going to continue, it will now be localized subsidy as different from imported subsidy. Is that correct?
Yeah, so two things here. The inflation in Nigeria is caused by supply, like it's a cost push, like we don't have enough supply of stuff. But to your second point of Dangote, yes, if there was a Dangote refinery working today and they are getting their crude oil from Nigeria, and we hear that Dangote is going to pay Naira for that crude oil, then he can refine that crude oil. I know it's an export processing zone, so he can import or export his crude oil to Nigeria. So the cost will fall a bit. There's not going to be a big fall in the cost of what we're paying. The difference is that we're not importing it, even though it's coming from a free trade zone. But quote unquote, we're not taking money to Netherlands. That's where the difference might be. So that would stop the dollar going out. That's what will happen. So that will sort of start to stabilize. So then NNPC can start to then make remittances back to FARC. And if NNPC is making remittances, then the budget deficit starts to reduce. And then the borrowing, the crowding out effect of the federal government and the private sector starts to reduce. Then hopefully there's now more money for the government to invest in other sectors. Right now, remember, all the money goes to the interest. Not even, before they were saying we're borrowing to pay salaries. Now, not even borrowing to pay salaries, we're borrowing to pay interest. So now we have to borrow to pay salaries, then borrow to build a road, borrow to do everything else. It's really crazy. So Dangote will help a bit. And we have to do more modular, small refineries that can just make 10,000 barrels of kerosene or diesel. We need more of those ones. Dangote's problem is that it's just too big. So now they're in a big problem. Let's remember, guys, if not for Russia, Ukraine, we would have been in serious trouble, right? Because when Joe Biden became the president, they passed an order stopping all international, US international companies and agencies and fund managers from lending to any new fossil fuel project. Same thing with the Europeans. All the Europeans, the ECB passed a law that they will not fund any new fossil fuel sector in the world again. They went to Scotland during the COP19 and said anything fossil fuel, and they put natural gas as fossil fuel. President Osinbajo went to Dubai and was telling them, hey, you guys can't do that. You just can't come and say everything is dirty and green. They ignored him. So if not for the war, by now, NNPC would have been illiquid. Nobody would have invested in anything in NNPC. That's the problem Dangote was having before the war, that they couldn't get funding for that refinery because nobody would fund that huge project. It was quote unquote dirty. So the Ukraine war has given Nigeria a big lifeline in time, not in money, in time, which means now Europe is looking for gas projects, they're looking for oil away from Russia. So anything you take to them now, they'll fund. So we have this window of opportunity. If tomorrow, if they make peace with Russia tomorrow, that refinery won't get built. I'm sorry, because nobody's going to fund it. It's already not being built today, right? To be like a Jakarta, it's 99% complete, but it won't work. So we have that opportunity to get everything locked in, increase LLNG to maybe train 9, 10 with this opportunity, increase everything that we can do now. Because once they make peace, everything will lock up again. They'll go back to their green mentality and tell you gas, everything. Already now, they are telling Africans that you cannot make fertilizer because fertilizer will ruin the planet. That's what they're telling Africans now from Europe. That's why you see the riots in Europe. They are cutting fertilizer use because to them fertilizer kills the environment. So lots of moving parts. We have to be very deliberate and stop playing around. Get this thing done, let Dangote start to work, then we can take it from there.
Okay, thank you very much, sir. We have some interesting comments in the chat box, but time will not permit us to take those comments. Thank you very much, Mr. Kalu, for joining us and helping us out navigate through this topical issue. On a final note, we just want 1 or 2 minutes of your time to give us the departing words before we wrap before we close the webinar. So, Mr. Kalu, just 1 or 2 minutes of your time for your departing words.
Yeah, I think the news is that there's going to be a recession. That's the news everywhere on TV, right? That there's going to be a recession or a slowdown. And what it means for us in Nigeria is that if that happens, that will cause that consumption will fall abroad. So even our crude oil that we're exporting, the price will fall, which means that incomes in Nigeria, opportunities might reduce. So I would just say going forward, be very deliberate in where you are investing and how you are keeping your money. Try to keep an emergency fund. Try to get ready, be flexible so that you're not doing any big projects in the next 12 months, right? Just watch everything happening for now. Be flexible, keep cash on hand, and assume that things are not going to be as rosy. If they turn out rosy, fine. But otherwise, just be flexible and keep things on hand, and let's take it from there. Yeah.
Thank you very much, sir. So for Mrs. Maureen Okeke, your question has been treated earlier by Nengi, but if you want further clarification, you can reach out to us via the email provided in the chat box. Thank you very much for joining us in this month's webinar. We look forward to having you in our subsequent webinar. Thank you and stay blessed. Bye.
Thank you, guys.
Bye, everyone. Have a good day.